All right, so hi folks, my name is Sourabh Mutha, CA Sourabh Mutha, the way they say it. I'm an educator with Pinnacle, also some other classes in Mumbai, Bangalore, and a part of an online learning platform. Guys, I'm here to tell you a little about how we teach IDT at CA final level at Pinnacle, also my methodology, and I want to give you a small glimpse of what I bring to the table. So let me just begin by telling you a little bit about me. If you've met me already at CA Inter, I've already taught you tax, both DT and GST at CA Inter. If we haven't met before, I have previously worked with PwC and EY, both big fours in their tax department, and I know in depth of what happens practically on the tax front. And that brings a lot when I teach also, because I use a lot of examples, बहुत real life examples use करता हूँ मैं, and I try to bring in theoretical part of CA curriculum with the practical part and try to bring the best of both worlds. Of course, while I teach, my one eye is always on the exam questions, because guys, अगर पूरा prepare कर लिया but exam questions के लिए you're not ready, then you're not CA ready or CA final ready. So that is what I bring to the table. I'll tell you a little bit of what I do by just showing you how the way I try to work. Just taking you through some example of the way I'd like to teach the batch which you will be a part of. So here we go. Very simple approach. First is, whenever we look at CA final IDT, first up, there are not too many people who finish CA final the entire IDT in about 2 months. So yes, just 2 months, 7 to 10 in the morning, you have to be here. And the more you're here, the more you're regular, the better you are. So it's just about 2 months, roughly about 120 hours is what it takes for us to successfully complete the entire CA final IDT. And guys, I'm in no hurry. So hence, when I teach also, when I revise also, I'm in absolutely no hurry. All right. So how do we look about it, and what do I look at, and what do I bring to the table? Is first, I try to teach and make you guys understand the entire concept. So if you have a background in tax, great. If you don't have a background in tax, even better, because guys, एक plain slate मुझे मिलती है to work on. So first we try and understand the chapter. I also provide, while we are doing the chapter, I make you guys write written notes. Yes guys, आपने कहीं से भी पढ़ाई कर ली है, but one day before the exam, if you're not able to revise, then it becomes very difficult, and hence I feel that written notes are a lifesaver. All my students agree that these written notes are very useful one day before the exam. So we write notes, and then we look at our Pinnacle book. So we have made a very concise, nice Pinnacle book. I will give you a glimpse of that book. We covered that book. We also cover the ICI material. Now, how is it possible to cover ICI material in just about 120 hours? That is 2 months. I'll tell you the way I've covered ICI material. Every ICI material is basically converted into a highlighted copy. I'll give you an example. I'll just put across something on the screen here. Here we go. So let's take an example of this chapter called Types of Customs Duty. If you see this chapter, I'm opening it from the ICI material, and of course, it's a big chapter with so much to read, but you don't have to read everything. I've already read through it and I marked the highlighted parts. So this is only and only what you have to read from the ICI material. So like that, we also cover the ICI material. This you can see is what we need to cover from the ICI material. If you read this much, whenever you want to study, you will be covering ICI material also in depth. I've also looked at the questions, illustrations, example. This illustration is important, so I've marked it in highlighted. So everything that is highlighted, you need to go through. The other questions, in these questions, whichever ones I feel are important, like here, I felt all 10 of them, all 11 of them are important, so I've highlighted them. So what I want to do is basically save your time by doing this to the ICI material. So we do that as well. Something that I repeatedly do is, every time I finish a lecture, the next time, the first 10 minutes of the morning and the last 10 minutes of the morning of the session, guys, we revise. So whatever we've done throughout the lecture, we try and revise so that we get a better and much better grip. Now, this is something that we do while we're doing the lectures. But after that, generally, typically what happens is you finish your classes about 5 months before your exams. And for people who are giving sometimes November, they actually finish almost 1 year before the exams. They finish their classes. Now, in that case, how do you go back and how do you revise? I have a very simple, I make a YouTube playlist. It's a very private playlist, and where every chapter is revised in a very concise manner. Example, the first chapter will be revised in like 5 minutes. The second chapter will be revised, let's say, in 7 minutes, depending on how big the chapter is. About 5, 7, 10, 15 minutes is the span of these revision videos. Now, what does these revision videos do? The entire class is summarized in that revision video. I try to tell you what we've studied, the shortcuts, etc. All of that in the revision video. So you don't have to struggle after a few months as to where should I start studying from. And all you have to do is watch this playlist and start revising from this YouTube playlist. All right. Something that I feel is my USP. I bring a lot of short forms or shortcuts to the table. I'll tell you a little example of a shortcut while I teach you a little session today. So these are my shortcuts developed by me and used so that in the exam you're able to replicate, give sections, case laws, etc. very, very easily. That is something that I bring to the table. Also, I have something called the quick book. Now, the quick book basically summarizes the entire IDT, whether it is GST, whether it is customs, or whatever part of IDT it is. I don't want to get into details because right now you don't have no idea about what's there in IDT, but the entire IDT is summarized in a quick book. Let me open up the quick book if it's here. CA final quick book. Yes, the quick book is here. And this is what I bring to the table in about 130 pages. And that too, not all the pages filled up completely. This is an example of my quick book. The first page only has my name. This is an example of the quick book. Guys, this quick book touches every chapter. It has a nice storyline, nice flow, and about 130 pages, which is a very small book. You can revise the entire IDT, and that is something that is really, really convenient. So something like this is something also I bring to the table. So this is about my teaching methodology at Pinnacle, and we try and do so really well, so good, and not just for portion completion, guys. I really feel that if the students do well, especially the IDT, the group 2 takes care of very well. So I just want to bring out something that you'll understand how I teach and bring to the table. So we'll take one chapter. There is a chapter in the part called customs. So like you know, or if you don't know, IDT has 3 parts to it. One is GST, which is basically the main part. 75% comes from here. And there's another part called customs. And there's a very small part called FTP, which I'm not discussing. GST, I'm not discussing. I'm just going to be discussing a small topic from the chapter called customs. Now, another thing that I bring to the table, which I think is very unique, is I have a storyline which basically covers the entire GST, which covers the entire customs. So like in GST, I have a story of an electric bike company. This electric bike company is an India-based electric bike company, and in that story, all the different chapters are basically covered. Same way with customs, I have a company called India Mobile Company, and in the India Mobile Company, like you will see right now, we will cover all the different chapters of customs in that India Mobile Company. So here we go. I'm just going to explain a very, very simple concept, then take you to an exam question and an ICI module question also around that simple concept. So let's start a very, very basic concept on customs chapter called valuation. So guys, what is customs? Giving you a little summary. Guys, if this is India, and let's say we are a company called India Mobile Company, as the name suggests, we manufacture really nice mobile phones in India. And of course, while we manufacture it in India, we don't basically produce all the spare parts. So from China, we import the batteries that are used in this mobile phone. So let's take an example that these are batteries coming from China. So this is basically the exporting country, China, which is basically sending us the mobile phone, the batteries to a port in India. Now from these ports, it goes to India Mobile Company's factory where the phones are manufactured and sold. But we are talking about this transaction here, the import. And generally, guys, you would know that on import, there are various duties. One of them is called basic customs duty. As you know, whenever the goods come at the port, they are charged a basic customs duty. Plus, there is some sort of GST also, integrated GST, which is levied besides other taxes. So basically, they are called import duties. So whenever you import goods, they'll be subject to some duties, which is called these import duties. Now, of course, the deal is this, that the higher the value of the goods, the higher will be the import duties. Example, if these batteries are for 100 crores, then the import duties will be on 100 crores. But if the batteries are for 300 crores, then the import duties will be on 300 crores. So the typical intention of people who import is to not show the real value, but show a slightly lower value. That is, like example, 100 crore rupees. So hence the government says, listen, we cannot keep it so subjective. Of course, I'm trying to teach you a concept which is a CA final concept right away. So I'm just jumping it and I'm making it very concise. But the government feels, listen, we will not be able to give you the liberty to choose your value. So we have a chapter called valuation. And we have some valuation rules. Based on that, you will have to determine the value of your import. So that is the concept, guys. That whatever you say, we will trust you, but we will also check it against some valuation rules. Now, the chapter's name is valuation. It is based on some valuation rules as well. So let's try and see how much are these batteries for. Guys, these batteries that they are imported are for 310 rupees. Why 310 rupees? You will know soon, but they are for 310 rupees. So always remember, India Mobile Company is importing batteries for 310 rupees. Now, what we start off with and what valuation rules suggest, there are some valuation rules, and the rule number 3 says that basically you can use the transaction value. Now, what is transaction value? Transaction value is the value that is what you are transacting with, as long as the buyer and seller are not related. So you and the Chinese entity should not be related, and the price should be the sole consideration. That means if you're buying it worth 310 rupees, you're not doing anything else, you're not paying anything else, you're only paying 310 rupees. So if those two conditions are fulfilled, you can take the transaction value. So okay, we've taken the transaction value, and let's say our transaction value is 310 rupees. All right. Now, this is what rule 3 says, but then of course we can manipulate it. Example, let's say we are on paper importing it for 310 rupees, but we are actually paying something more. Let's say we are paying about 690 rupees to them indirectly. Example, we are paying some commission separately. We are paying them some separate charges indirectly so that this value remains lower, but the government doesn't like that. So hence they say that some amounts we will have to add to this transaction value under rule 10. So rule 3 basically is linked to rule 10, and rule 10 says that the following amounts should be added or should be included in the transaction value. So you will basically take the transaction value, that is 310 rupees, and then you will add some items which they are telling us to add. You will add those items in this transaction value, because as you know, the government's intention is to increase the value, because the higher the value, the higher the import duties. So this is the concept of transaction value, which is basically rule number 3. And then we go to rule number 10, and rule number 10 basically says that there's a shortcut. This is my shortcut bracket. Shortcut is basically a small memory technique which will help you remember this for really long. So small shortcut cause free goods require some payment. I've always heard of one line that there are no free lunches, guys. Same way, this line is basically based on that there's a small line called cause free goods require some payment. If someone is giving you something free, you will have to repay them somehow. So that's the line, cause free goods require some payment. Now, why is this line there and what is this shortcut? This shortcut is basically rule 10 tells you to add some amounts. Now, what are these amounts? Are basically depending upon these 5-6 items. First is cause. So you will add any other cost or service charges that you are paying to China. Example, if China is, there is an agent in China who's doing some work for you, except buying commission. There's someone who's basically helping you buy, not that commission, but any other commission, any other cost, any other service charges that you pay. So those costs you will have to add. Example, let's say we will give the number 100. You're paying 100 rupees as some other charges for packing, etc. You're paying them separately. So you have to add that, because the government says even that should be part of value of supply. Next, free goods. For making these batteries in China, did you provide them something free of cost? Example, a mold or die, etc. Any materials that you have provided them either free or at concessional price, those free goods or those concessional goods value also needs to be added, because you have provided them free of cost. That means there is some value which needs to be added. Next, R for royalty. Once the batteries come into India, when you sell the phone, from every phone sale, are you paying them some royalty? Now, this royalty also is an indirect payment to them. That means you're trying to hide, you're trying to say that we have to only 310, but actually you paid much more than that. So that royalty also you'll have to add. Next, if the sale proceeds, finally, guys, the batteries, either you will sell it in India, you will import and sell, or you will use it for your manufacturing the phone. In any case, whenever you sell these batteries or whenever the sale price comes off with the phones, if you're going to pay something back to China, then the government feels even that should be added. Even that they need import duties on. So that also has to be added. And last, guys, any other payments which are linked to this import. example, any other payment, of course, not something that is done post importation, but any other payment which indirectly links to this import should also be added, because the government intention is very clear. They feel if you have paid directly 310 rupees, but indirectly you paid other payments, then all these also to be added to the value. So 1, 2, 3, 4, 500 plus 310, that is 810 rupees is the value. This is basically called the FOB value. Now, why do I save the batteries for 310 rupees? Because I want you to remember two rules which you have to quote in the exam also. Yes, in my sessions, I want you to remember sections, the rules, the case laws, and I have various shortcuts to remember, like this 310 rupees battery. So rule 3 tells you take the transaction value. Rule 10 tells you that add these items. And now once we've added these items, this is basically called the value of supply. This is the value of the supply. Now, just opening a new page. So what all we've done, just trying to recap. First, as per rule 3, we have taken the transaction value. Then we added some items under a rule called rule 10.1. We added some items. Basically, these are some inclusions. And now, guys, whenever you import, there are two things which ought to have been charged. Even if you have not charged it, you have to add them to the value. And that is as per rule 10.2. And basically, those are two things. One is freight. That means when the batteries are coming from China, either by ship or by air, some amount has been paid for freight that you have to add, plus insurance amount you also have to add. So basically, freight means the cost of transportation, loading, unloading, everything till they reach the port of India. So all that you have to add, and insurance you have to add, that is given under a rule called 10.2. So rule 3, 10.1 and 10.2. Now guys, rule 3 is done. Transaction value you've already taken. 10.1 is something that we also figured, and the shortcut is cause free goods require some payment. This is the beauty of a shortcut. See how easily we remember all of them. And by the way, this is 10.1a, 10.1b, 10.1c, 10.1d, and 10.1e. But you'll never have to remember this if you remember the shortcut, cause free goods require some payment. And now comes to freight and insurance. Freight is very simple. Whatever freight is given, if let's say you paid 1 lakh rupees or 50,000 rupees, you have to add that. But only thing is, in case of air freight, you have to add only maximum 20%. Basically, the government is being very generous. They say, listen, the freight we'll add. And why are they adding? Because they want GST or they want customs duties even on this. So they say the air freight will be restricted to maximum 20% of the value, and insurance also whatever you paid. But the insurance, if not given, then you will assume at 1.125% of the value. So these both percentages you should remember. Freight is maximum 20%. Even if it's given higher in case of air freight, it will be restricted to 20%. And insurance will always be whatever is the actual. If the actual is not given, then 1.125% of the value. So these are also two things that you will add. But first you will get this value, and the second you will add the insurance and freight. So this is what is called valuation. I've given you a basic idea. Rule 3, Rule 10.1 and Rule 10.2, but you will never forget them if you remember batteries are imported for 310 rupees. So guys, this is how I teach. I just want to give you a glimpse, a small trailer before the actual film arrives, that this is what I bring to the table. This is how I like to teach. I like to give a lot of shortcuts because guys, exam में अगर replicate नहीं कर पाए, अगर आपको पूरा concept याद है और Rule 3 और Rule 10 आपको याद नहीं है, तो then you will not be able to convert the good marks that you want to score. Now I'm just showing you one exam question. Also indirectly, I'm trying to show you something which is called a scanner. So this is basically a scanner that I have. Just one second. Yes, the question bank or the scanner. And this question on bank or scanner, for every chapter, whatever questions have come in the exam, we try to do those, because मैंने बहुत देखा है guys, सब लोग को chapter समझ आ जाता है, but when it comes to writing the paper or when it comes to solving exam questions, they are unable to do that. And that's a basic reason why people don't, they know the chapters, but they can't replicate it in the exam. So let's try and solve this. This is a Jan 21 question. This is in question number 2B, and it is for 5 good marks. Let's see how we can attempt it. ABC Trade International Limited has imported one machine from USA. So instead of calling for batteries from China, we're importing a machine from USA, but it's the same concept. It has given the following particulars. Price of the machine is 10,000 US dollars. The freight paid, the air, is 2,500 US dollars. But remember, the air freight cannot be more than 20% of the 10.1 FOB. So first I have to get the value and then uska 20%. So we'll have to do this in the second part, not in the first part. Design and development charges paid to a supplier in USA. If you're paying something separately, it has to be added. Remember, cost free goods. So these are other costs. So this also has to be added. Commission payable to a local agent of exporter paid by ABC Trade International. So any commission also has to be added unless it says that it's a buyer commission, then you don't have to add it. And guys, I've not taught you which rate to use, but you will always use the rate given by CBIC. That is a conversion rate, which is given here as 70 rupees for $1. The GST rate was given. We'll not do this bit because I've not been able to teach you the entire chapter. It's a big chapter. I've given you a little gist. And insurance charges have been actually paid, but details are not available. If they're not available, then 1.125% is what we need to calculate. So guys, I have a calculator here and I'm going to start calculating. Here, we start off always with the transaction value. So I've started off with 10,000. This is as per rule 3, taking the transaction value, putting a small tick mark that this is covered. Design and development charges another 500. So 500. So basically that is 10,500 USD. Now commission payable also I need to add, but this is in Indian rupees. So first I have to convert this 10,500 into 70 rupees. So basically 10,500 into 70 is 7,35,000. Now to add to this, I have to add the commission. So 14,000 I'm going to add here. So this 14,000 makes it 7,49,000. Now to 7,49,000, are we done? Yes, we are done with everything, except we now need to add two things, that is freight and insurance. Now guys, freight is 2,500 US dollars. If I have to convert it, 2,500 into 70 is basically 1,75,000. This is what has been paid as freight. But if I take 20% of this, yes, you have to take 20% of this. So 7,49,000 into 20% is 1,49,800. So I have to restrict my freight to 1,49,800. And obviously I will also add commission. So the insurance part is 1.125%. So 7,49,000 into 1.125% is basically 8,426.25. When you add both these amounts to the value, this is basically 907,226.25. So 226. This is the cost insurance freight. This is the value of supply. Find out the total customs duty and IGST payable. Of course, on this, you have to add the customs duty and IGST. I've not taught you that because that's in a different chapter, but this is what your chapter looks like. I'm going to keep my session really short here. This is what I like to teach IDT as. So if you really enjoy this, CA Final IDT will be a very smooth walk. One by one, we'll finish the chapter. We'll keep revising it. You'll have revision videos. You'll have all my support, the quick book, and everything that you ever need to. All right. So then see you well and see you soon. Thank you.